I want to talk about venture capital, talk about IPOs, initial public offerings. And in particular, what struck me is the story about wework, which I think is a reflection of, maybe what's going on in the culture, some of the negative trends that are going on in the culture, what happened at wework. But also, it's a reflection of some of the, of kind of the character and the nature of Silicon Valley, and maybe in how it is changing not for the better. But, it's not clear. It's hard to tell from this one example, but it is a big example. So I don't know how many of you have ever been to WeWorks, but I've been to many. I've been to a WeWorks in Israel, where the Einman Center actually in Israel has a office at the WeWorks in Tel Aviv. I've spoken at WeWorks and I'm trying to think where it was. I think it was in Mexico. And, I've been to WeWorks in Asia, and of course, I've been to WeWorks in London. I gave a talk once at a WeWork in London. And, it's hard to be in a major city anywhere in the world today without there being a WeWorks. And WeWorks is basically shared office space. Shared office space. It's really cool shared office space, right? Really cool shared office space. In the sense that it's full of, it's very modern, it's full of color, it creates a friendly environment, there's a shared place where you can eat and we can get some drinks and really a kind of place where you want to hang out and talk to people, and lots of the people who rent space at WeWorks are tech people, so it creates a sense of community. So WeWorks are really cool places. And if you've ever been to one, I think you remember it because of the colors, because of how vibrant it is, because of the energy that the place has. These shared working spaces have a lot of energy. And I've seen other shared working spaces, they just don't work the same. There's something about WeWorks, the way they structure the space, the way they encourage, I think the way they lay out the food and everything else, they encourage interaction, and it's very cool. WeWorks is a company that basically builds these out. They lease the space in regular office buildings, and then they rent them out, office by office, or a number of offices by number of offices, to people from the outside. I have an office here in Puerto Rico, not at a WeWorks. I don't think there is a WeWorks in Puerto Rico, but at a shared office space where you have a secretary up front, who takes care of the mail, takes care of a lot of the the administration of the office. If you have any problems with the office, technology, there's a shared printer, there's a shared technology, there's shared stuff all over the place, right? And WeWorks has significantly grown. 2 years ago, WeWorks had 107 locations, and today it has over 900 locations, and the plans are to get to several thousands of locations. Now, why does anybody care about WeWorks? Because for the last couple of years, everybody in technology has been talking about WeWorks. WeWorks is this technology, it's considered technology, unicorn. Unicorn is a company that is dominant in its field and produces massive returns for its investors. And here we had this company that was considered this amazing technology company with huge investments from venture capital community. We'll get to who invested in it in a minute. And the sense of this was the new Uber, this was the new potentially Facebook, this was going to be a dominant player in the tech space moving into the future, and it was going to be worth tens of billions of dollars. Indeed, it raised money at last round that it raised money from venture capitalists at a $47 billion valuation. One of the largest valuations ever for a private company. Now, the first thing you have to ask yourself, and I'm surprised other people haven't, and I'm surprised these smart people in Silicon Valley never asked themselves, is, why is this a technology play? Now, I understand that technology plays a big role here. They offer, really high quality technology. They offered, they offer really, technologically advanced space, if you will. But why is this a technology play? I mean, this is a pure real estate play. This is about redesigning space, leasing space, redesigning it, and then renting it out. And providing some standardization and some, design and beauty and technology and stuff like that. But fundamentally, this is all about real estate. And it has very little to do with tech. There's no interesting super duper technology behind it. It's just a real estate play. It's a real estate company. And it's strange because everybody has talked about it as if this was the technology company of the 21st century. This is going to be bigger than Uber. This is going to be bigger than everybody. And so so it leases the space and then leases out the offices. And it invests a lot of money in setting this up and in managing it and everything else. And it turns out that this is a company that loses huge amounts of money. So it had revenue of $1.8 billion last year, I guess. And it was losing $1.9 billion. That is, for every dollar that it brought in, this company was spending $2. For every dollar it brought in, it was spending $2. That's not sustainable. It was growing by huge amounts. Now, it's true. Some of that money is up front. That is, you set it up. And I haven't seen and I haven't looked at the financials in detail to know what the run rate would be. That is, whether over time they would start making a profit. That is, once they made these investments in 900 locations or 5,000 locations, or whatever the number of locations was, is there a point at which they would start making money? I assume there is, because I assume that people didn't invest tens of billions of dollars in them. I think total amount invested in the company is $13 billion, plus billions more of loans, without running the numbers and checking that it's profitable. The main investor in WeWork is a Japanese company. A Japanese company that's been around for a long time, since the mid-90s, really. Well, it probably was founded earlier than that, but it's been in the news, if you will. It was founded in 1981 by a his name is Masayoshi Son, who owned originally a computer parts store, and he launched a number of different magazines about technology, other stuff about technology, and grew and created this company, and this company ultimately went public. And it bought Comdax, which is, you remember, the interface group, and it bought all kinds of other companies back then. But it became, in the 1990s, it became a major player in venture capital. It's invested in, it put together, I guess, joint ventures and invested in Yahoo, created Yahoo Japan, and they created a holding company that then invested in other technology companies. One of their big, major home runs is they invested in Alibaba. They put $20 million into a tiny little internet company in China called Alibaba, and that $20 million turned into $60 billion when the company went public in 2014. So SoftBank has been a venture capitalist. I remember them doing many deals in the 90s. They did many deals in the 2000s. They've been very, very successful, and they have invested billions of dollars in wework. And indeed, they're the largest investor. There's some Silicon Valley venture capitalists, primarily Benchmark, which, you know what Benchmark is famous for? Benchmark is famous for investing in eBay. Now imagine somebody coming to you and saying, this is, I don't know, this was B in the late 1990s, saying, I'm going to take, you know, basically the want ads in the newspapers. I'm going to put them up on the internet, and I'm going to create a auction mechanism where people can bid for those items that are being sold at the back of the newspapers. And I think this business is worth gazillions of dollars. Now, I can tell you that if they had come to me, I would have said, you got to be kidding. You know, I'm not, you know, that's ridiculous. There's no way to make money at that. Why can't everybody do that? What's so special? Of course, eBay became one of the most successful companies in technology history, and when it IPO'd, Benchmark made, I can't remember what percentage, it was over 2,000 or 20,000, I can't remember, but it was one of the most successful venture investments in all of history. It was a phenomenal, phenomenal success. Anyway, these are real investors in this company. That's supposed to be a technology company. But I read about this. I read about what they do and how they do it. And I don't see any technology here. I see a real estate play. And I see venture capitalists who maybe are not that good at pricing real estate. But it's not just that. So wework, you know, wework was going to be this massive IPO, this massive initial public offering. They're going to list, they're going to raise billions of dollars, they were going to make everybody rich. A lot of these venture capitalists ultimately were going to get out, and they were going to, it was going to be huge. And they listed, they filed what's called an S1, I think it was about 6 weeks ago. And an S1 is like the documents that you file in order to go public. It's all your financials and information about the corporate structure and the governance and the CEO and the relationships and the conflicts of interest. And, you know, it's a massive document that they filed. And until then, you're a private company, so a lot of that information nobody knows about. Well, people started reading this stuff. And what they discovered was pretty unbelievable. What they discovered was a company that was basically built in quicksand, a company that was losing $2 for every dollar of revenue, a company where the CEO had borrowed huge amounts of money from the company, had sold much of his stock. Now, that's something that in Silicon Valley in the old days you never did. If you were a founder and you had stock, you didn't sell it until the company was sold or there was an IPO. This idea of selling it while it's private, while all the other investors are still holding it, it was unthinkable. It turns out this founder was selling much of his stock and buying with it houses everywhere. You know, 5 different homes, all worth many tens of millions of dollars for a company that, you know, was losing huge amounts of money. Huge amounts of money. He purchased a $60 million Gulfstream jet for wework while the company is losing billions of dollars. Slowly, as this information leaks out, the market starts saying, well, wait a minute. We don't want to buy the shares of this thing, not for the kind of valuation they were proposing, which was, $60 billion potentially. Somebody was even saying this could go as high as 90-something billion dollars, maybe be $100 billion IPO. And slowly, people are rejecting this. The Wall Street Journal and the Financial Times, who still do relatively objective financial analyses, where maybe objective journalism has not died yet, went out there and started looking at the books and said, well, wait a minute, there's nothing here. Right? By the way, the CEO had a $500 million line of credit at JP Morgan. $500 million. Backed by what? Backed by the hype. Backed by the promise of this amazing IPO. Anyway, the story is that more and more information came out. It also turned out that he was using company money to make investments in all kinds of companies, but not companies based on, you know, valuation, based on analysis, but based on his pet projects. You know, he invested $32 million in a startup from surfer Laird Hamilton called Laird Superfood. $32 million in a superfood company. $14 million in Wave Garden, a company that makes surfing wave pools. All kinds of weird stuff. And then there was the governance of it. So it turns out that once the company was going to go IPO, the founder, his name is Neumann, and by the way, he's an Israeli. The founder was going to get 20 votes for every vote a shareholder got, and anybody else got. He got 20 votes. And bizarrely enough, if he died, his wife would have the power to name a new CEO, independent of the board of directors. Now that's just ludicrous. From a governance perspective, from a corporate management perspective, from a business perspective, completely nuts. This was all in this prospectus. So slowly, this is declining. The valuation is declining. Right? And SoftBank is saying, well, wait a minute, you know, we don't want to have anything to do with this. We need to withdraw the IPO. By, you know, a week ago, basically, they'd given up a lot of this governance stuff. He'd given up his 20 votes, and he'd only get 10 votes. And, you know, they were slowly giving stuff up, and they agreed maybe there'd be a valuation between 10 to 12. Remember, they started out 60 to 90. Now it's 10 to 12. And, of course, if they don't issue the stock, they need $3 billion. They can't get a loan. If they can't get a loan, how do they keep the company afloat? The company's losing $1.8 billion a year. So by last week, basically, a decision is made to withdraw the IPO. There's no way they can go public. Nobody wants to buy their stocks. Nobody wants to touch them. Neumann, who is the CEO, is forced to resign. He stays a non-executive chairman, but is forced to resign as CEO. And the whole company is now focused on trimming overhead, just like Uber, and trying to figure out a path to profitability, or at least to be able to show some numbers that suggest what profitability looks like. Right? So that's kind of the story. Now, afterwards, there were stories about this Neumann. He walked around the office barefoot. I don't know why anybody cares. He did drink a lot, and he would regularly smoke pot in the office. Not exactly signs of, you know, the reassuring in terms of investors, in terms of a company you would want to work with. Now it's interesting. It's interesting to observe this, and I think that the number of things you could say about this. I mean, the IPO failed. IPOs fail. That's not that big of a deal. Investors know, you know, venture capitalists know that if 10 investments they make, 6 are going to fail, 3 are just going to be okay, and 1 is going to be a home run. As long as 1 in 10 is good, is a home run, they're fine. But if you add this up, all this, you know, this weirdness, this attempt to you know, pull one over, it seems like, with the numbers. Or maybe not pull one over because they revealed all this, but the idea that nobody cares. Nobody cares about profit. Nobody cares about the accounting. Nobody cares about the actual numbers. Nobody cares that you're insider dealing. Nobody cares about this stuff. The very fact that you would think that is bizarre and is reflective of a weird culture. And this comes after a real fraud. I don't think wework is a fraud. I just think wework is a hype that is not based on any reality. It comes after a real fraud. Elizabeth Holmes, who defrauded investors of billions of dollars around a home testing kit and pulled it off. I haven't seen the documentary yet. I haven't read up about a case, but it's another case of a massive fraud. I mean, things that were unheard of 20, 30 years ago in Silicon Valley. Now, there's always failure in Silicon Valley. There's always companies that don't succeed. There's always companies that I look at and say, oh, that doesn't make any sense. Why did anybody invest in that? And of course, it's easy to do ex post. But there's something, you get a sense. Add to this. Uber struggles to make any money. Add to this. The complete capitulation of Silicon Valley CEOs to PC culture. Whether it's in the issue of free speech, or not free speech, but speech, language, what is discussed. Whether it's, Amazon raising the minimum wage to 15. Now I know they gamed it. But they raised the minimum wage to 15 to kind of appease the critics. I mean, Silicon Valley strikes me right now as a place where there's a lot of hype, WeWork type of hype, and a lot of groveling, a lot of just giving in to the, politically correct police, whether it's on speech or whether it's on politics or whether it's on, minimum wage, environmental stuff, Like think about Amazon committing to being carbon neutral by 2040. Really? And particularly given that, most of the carbon is not emitted by Amazon. It's emitted by the people who make the products that Amazon sells. And that's all done in China, which is burning coal to do it. And of course, they're not counting that in their carbon neutrality. But the whole idea of carbon neutrality, the fudging that Apple did, I think that Alex Epstein has documented, the fudging that Apple did with regard to carbon neutrality. I mean, Silicon Valley strikes me as just capitulating. And instead of being kind of the place in the country that doesn't accept political correctness in anything, the place that pushes the envelope, that innovates, that challenges the status quo. When Uber started and they were told you couldn't do this, or they got a cease and desist order from different municipalities, they said, to hell with you. Take us to court. Let's fight this out. You don't have jurisdiction. And yeah, the CEO of Uber was a jerk. And yes, the CEO of Uber probably did things that were inappropriate. But he pushed ahead. Right? He pushed ahead in spite of all of that. Today, the sense is that they roll over. They just roll over. So one wonders what is going on in the culture of Silicon Valley. And I'm a huge fan of the Valley. But when a real estate play becomes presented as a technology company, I mean, yes, Rob on Facebook comments that in the last few rounds, SoftBank was the only investor, and that's true. But Benchmark is in this deal. Why is Benchmark in this deal? Benchmark is a pure technology VC. What's this got to do with Benchmark? It's the only VC on the board of directors. And why is SoftBank in it? SoftBank, I don't know. They're not in Silicon Valley, but they're very much embedded in Silicon Valley. They don't strike me as idiots. Maybe they've been lucky. Maybe it's just luck in the past, but they've done some pretty amazing deal in the past. They've raised the largest venture capital fund in history, $100 billion, called the Vision Fund. What is going on in the Valley to make this possible? I get that the New York bankers got caught up in this. You know, everybody in the Valley is saying this is the company, and they got caught up in trying to take it public and trying to, but even there, you know, really run the numbers. Jamie Dimon was at JP Morgan, was heavily involved in the IPO. I mean, is your expectation that investors are that stupid that they would buy a company like this with these kind of numbers at those ridiculous kind of valuations? Is that even possible? So you've got this, on the one hand, you've got a meek Silicon Valley, a Silicon Valley that seems to be succumbing to the status quo, succumbing, you know, the other big thing in Silicon Valley these days is everybody saying, yeah, bring on the regulations. I mean, Zuckerberg, the era of self-regulation is over. You know, Microsoft saying the tech sector should embrace regulation. A far cry from Steve Jobs, not Steve Jobs, Bill Gates telling Congress, you stay out of our lives, we'll stay out of yours. We don't want to lobby. We don't want to be in Washington. We don't want to be involved in politics. Now we're saying, you know, self-regulation is out. Self-regulation is out. And even Tim Cook, you know, the guy basically created the greatest supply chain, you know, maybe with Walmart, competition with Walmart, and now Amazon, in history. Now goes to grovel in front of President Trump to beg him to lift tariffs. I mean, you see all this. It's not the Silicon Valley I remember. It's not the Silicon Valley that did what it did in spite of all the naysayers. Oh, Moore's Law couldn't continue. Oh, Apple was going to die any day now. Microsoft couldn't be resurrected. I mean, and they did it. They're incredible. They are productive geniuses. But they become productive geniuses who are kind of meek and afraid and excited about real estate plays. I mean, WeWorks is fun. WeWorks is great. WeWorks is wonderful. WeWorks not changing the world. Not changing the world. Not the way Amazon and Apple and Microsoft and all these other companies have really changed the world. That's what Silicon Valley is about, creating those kind of companies. And there's still companies like that, smaller ones. You know, companies whose apps we use all the time, that are gaining scale, but it just, you know, the philosophy, the rotten philosophy, you know, there has to be a consequence. And I wonder whether, you know, I hope I'm wrong that Silicon Valley is going bad. I hope I'm wrong that the politically correctness and the bad philosophy is now affecting their ability to be visionaries, their ability to build and create. But I fear and I worry I'm not. Regulations eats at you. Political correctness eats at you. And a bad philosophy destroys your capacity to think, to innovate, and to change the world as these companies did. There's a good op-ed in the Wall Street Journal that Andy Kessler, I like some of Andy Kessler's work that he writes. It's called Silicon Valley Goes Soft. Silicon Valley goes soft. And I think he's right. Silicon Valley is going soft. And one has to wonder about our financial markets, and one has to wonder about Silicon Valley and about, but also the bankers looking at WeWorks. I mean, I've been reading a bunch of the stories behind the WeWork stuff. And yeah, you know, stuff fails. I get that stuff fails. Absolutely. But there's something, I think there's something, you know, much more here. Much more here. By the way, somebody is saying that there was the headline today that Zuckerberg is reportedly terrified that Elizabeth Warren will become president and attempt to break up Facebook. But also, the other story that was headlined, I think, last week was that big Wall Street bankers, donors to the Democratic Party, basically have said that if Elizabeth Warren is the nominee, they were going to shift their funding. They were going to shift their funding to Republicans. So Wall Street is terrified of Elizabeth Warren, including the Democratic CEOs of Wall Street. They're terrified of Elizabeth Warren. The great challenge is they're not happy with Donald Trump, but they would do anything to avoid an Elizabeth Warren presidency. So it is going to be really, really, really interesting to see as Elizabeth Warren rises in the polls, Biden declines in the polls, how these captains of industry respond, how these successful entrepreneurs and successful bankers respond, knowing that she is coming after their business. Unapologetically, clearly, she has a plan for everything. It's all in writing. It's all in writing. It's all on her website. You know exactly what she wants to do. I mean, she won't do everything she claims she wants to do, but we know everything she wants to do. Well, how will those people whose businesses are going to be crushed by her, how are they going to allocate their money? They only have one vote, but how are they going to allocate their money? So, you know, it makes one worry about the state of our financial markets. It makes us worry about the state of capital markets, of venture capital markets, and just the state of all this hype. And maybe this is the beginning of a correction, in a sense of you know, we all know that there are bubbles out there. We don't know exactly where they are, and you know, bubbles in the sense of malinvestments, wrong investments, investments that don't make sense, investment that was spurred by the Fed's monetary policy since the financial crisis, by the Fed's artificially low interest rates, by the Fed's QE 1, 2, and 3. You know, we saw it, you know, a couple of weeks ago. I talked about it with the Fed coming into the short-term lending market and pouring well over $100 billion into that market to keep liquidity afloat. I mean, there's a lot of distorted stuff in our economy. And wework is not purely financial. It's not purely a distorted investment. There's something more going on here. Right? There's something more going on here. By the way, with regard to SoftBank's investments, because SoftBank was investing in the last few rounds, kept spiking at the valuation, got the valuation up to $47 billion, and I think it gave something like $10 billion to wework. But if you look at the contracts that these guys write, because they're not idiots, the contracts they write are such that they get all the proceeds first. So let's say SoftBank gave wework $10 billion, and let's say wework lands up with a valuation of $15 billion. Well, they gave $10 billion at a valuation of 47. They didn't, because they gave it all kinds of valuations. But let's say it was all at 47. Then you would say they would lose a huge amount of money, because suddenly the valuation is cut from 47, let's say 45 just for the sake of it, to 15. You know, that's a two-thirds cut. So would SoftBank lose two-thirds? No. They wouldn't lose two-thirds. Because SoftBank has preference. They have contractually, they get the first $10 billion in valuation. So they would actually wipe out all the people who gave money to wework before them, and they would own two-thirds of the company if they put in 10 and the valuation was 15. So it's a pretty interesting, you know, again, this is how venture capital works. The money that comes in protects itself from, you know, particularly when they're the only ones putting money in, like SoftBank, protects itself from kind of a decline in valuation in the future. And the people who really feel the decline in valuation are the employees, or other shareholders that don't have the same kind of quality of rights as the SoftBank people. So, you know, I wouldn't feel bad for SoftBank in these circumstances. And the fact is, you know, they got conned by this guy's personality. This guy's personality was huge. He was a big personality. He had a huge dream. Oh, I forgot. I was going to read you his vision for the company. I mean, this is what I mean by, you know, how these ideas, let me just find this. His statement for the vision of the company. What was he trying to do? What is the mission statement of the company? So note, again, this politically correct leftist environment, you know, so this is the mission statement of wework. And by the way, wework has changed its name about a year ago to we. And this is the mission statement. We are a community company committed to maximum global impact. Our mission is to elevate the world's consciousness. I mean, they're not a tech company. They're not a real estate company. They're a mumbo-jumbo spiritual company. Non-objective, doesn't mean anything. Garbage, you know, mission statement. We are a community company. I don't know what that means. Committed to maximum global impact. Our mission is to elevate the world's consciousness. I don't know about you, but I don't think the world has a consciousness. Only individuals have consciousness. Anyway. So that's where we are, and I just find it sad because what I want to see out of Silicon Valley is what Zuckerberg was in his early days, what Uber was in its early days, what Apple was throughout Steve Jobs' tenure. It was stick it to them, just do it. Just go, have great ideas, and just go and make them happen and figure it out and solve problems and change the world and make doodles of money doing it. And challenge the status quo and don't accept the status quo and don't accept the politics and don't accept the regulations and don't accept the world around you. A few years ago, I was sitting down and having coffee with one of the legends of Silicon Valley, a man, you know, who basically gave the first formal venture capital money to Steve Jobs. Remember, this is a Steve Jobs who was a hippie, who was filthy, who was, you know. So I have no problem, by the way, of the CEO of wework walking around the office barefoot. That isn't the problem. It's the 5 homes that he's bought before ever going public, before ever really succeeding, being a success, that I have against him. Not the barefoot. Steve Jobs was worse than barefoot. Anyway, I was sitting with this guy who'd funded, you know, Cisco and Yahoo and Google and many of the legendary companies in Silicon Valley. One of the great venture capitalists of all time, working for one of the 2-3 greatest venture capital funds of all time. And he said, it's not the same. Silicon Valley is just not the same. The regulators are here. Government is here. And then he said it like the MBAs are here. In the sense of what he meant by MBA as, you know, conventional stuff is here. Conventional business people are here rather than the innovators, the people who want breakthroughs, the people who want to challenge stuff, the people who want to really change the world. Everything's more conventional. Everything's more staid, passive, uninteresting. And that was sad. That was sad. Really sad. Yeah, I mean, somebody mentions this. How about all the Beyond Meat products coming out lately? Yeah, I mean, that's another great example. I mean, everybody is excited about a technology company that makes fake meat. Everybody's talking about it. Everywhere I go, people are talking about Beyond Meat. I mean, really. Now, granted, they're using, I don't know, biotech to do this. But who cares? Meat is pretty good as it is. And instead, there's massive venture capital investment, massive hype, massive, people engaged in what? In companies producing stuff that tastes like, everybody said, oh, it tastes like real meat. You got to try this. It tastes like real meat. It doesn't. It tastes like styrofoam. It's awful. Now, one day, they'll be able to make real meat. I don't know, atoms. They'll build it up into real meat. But they can't now. And the junk that they're pitching as meat replacement stuff is not meat. Doesn't taste like meat. But this is hype in Silicon Valley. You can understand it being hype, I don't know, among food manufacturers, among food people, among environmentalists, about nutritionists, about whatever. But Silicon Valley? But this is how bad ideas, bad philosophy, and a lack of vision and strength and is crippling the place, unfortunately. Now, I hope I'm wrong, and some of you who work in Silicon Valley will tell me I'm wrong if I am, I hope. But that's what it looks like from the outside. Okay.